everybody. Welcome to the Bob Knakal Show. I'm your host, Bob Knakal. There's a lot of brokers in the crowd. So the lender gets a BOV, or the LP gets a BOV from a broker. That BOV may not be accurate, may be accurate, but you go in, you have a difference of opinion. Do you go in, you're actually picking apart the BOV to try to convince the counterparty what the reality is economically? Do you go in with your own models? How much selling or convincing do you have to do to get that transaction done?
I find the best way to do these things is to be very transparent. And what I lay out is, here's how we view our metrics that we need to believe to say it's worth making this investment. So if we're buying an office building today, no one really knows what the reversion value is going to be when we sell it, when we're done, right? 3 to 5 years from now. But we target, depending on the building, somewhere between the stabilized cap rate NOI of 7 to 8%. Closer to 8 than 7. And we say with that should give us enough margin that as New York recovers over 5 years, that cap rates will recover. Like, when we sold our public company, we sold it for a 3.7% cap rate. When we sold the big portfolio to Blackstone, $4.5 billion, it was like a 4.3% cap rate in 2014. So cap rates will come in. I don't know where they're going to come to, but if I know that I've stabilized at close to an 8, I know I got room for that to happen. The good news is the lenders and everyone else also has no idea where cap rates are going to be and can't say with any conviction it's going to be better in that mix. So we're all guessing, right? And that's, the part of the game. Then obviously leasing, we're able to really share models as to where that is. And then it's just a question of math. And then where the splits are going to be, what's the sharing going to be. We're pretty upfront of what type of returns we need to achieve to be able to do this. And then a little bit of the art is, what's your price per pound? What's the price per foot? How do you feel about that in terms of the situation? And sometimes size, we don't do small deals, but some of these deals are too large, right? I mean, that's another impediment, which is, in New York, are we going to come back to a day where we're going to be able to sell a building for $2 billion, right? We bought them before. But is there going to be enough investor appetite to be able to do that in the future? So you got to think about that in the context as well. So it's a lot of give and take and a lot of transparency from us all along the way. And then I would say the biggest challenge I find to date is that you deal with the lead lender, but then for them to get their co-lenders on board becomes challenging.